Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So in today's report we have taken a look at the debt sale in the United States. So actually initially it was some kind of the soap opera topic and subject that actually nobody treats seriously. But as we come closer to the X day, as it now calls in the media at this point, and as we see that tax collection is lagging behind the average level, more and more talks appearing on meeting the X day earlier and it was suggested, and currently this topic has become a really serious problem. So even the bond markets that treat it seriously. So we already see the difference between the interest rates of the 1 month bill and the 3 month bill. I'm not speaking even about the credit default spread on the United States Treasury bonds. This first topic. Second, it's taking a bit wider on a wider picture. So we could say that it's really big problems in the United States on the global political and economical arena. So actually, United States dollar is losing weight on foreign reserves and global trading much faster than it was anticipated earlier. And actually, in the recent few months, dollar has lost approximately 8, maybe 10% of its usage in global trading and foreign reserve. This is very fast. So the situation is so bad that the United States even start thinking to rewire Russia back to the SWIFT. So it's unprecedented moments, and actually, well, I don't know how it will be finished. Now it is just backed by idea that, well, it is necessary to complete the grain trade, grain agreement. But what stands really behind it's a really big question, because the recent action by the United States has actually made significant hurt to foreign demand for United States Treasury bonds. And in the current circumstances, when the Fed itself has some liquidity problems, hardly it will be over by some positive result. So we will see. But in general, we're actually split our analysis in two parts, mostly the same as in the euro currency, and our forecast will be, actually stand in two parts. So first one we treat until June 14 in the next Fed meeting, because there they will have to decide whether they will raise rate again or not. Until this moment, we suggest that overall background will be positive, because whatever will happen in May, hardly will get any big hurt for gold market, because 25 basis point rate change already is priced in. This is first moment. Second moment, until the mid of the June, all this are actually theater of the absurd will keep going. I mean the debt sale discussion, and all this stuff will be supportive for the gold market, because investors will start nervous. All this endless talks about between the Republicans and the Democrats concerning this debt sale, it's will lasting, and as we will go to our final point, to X day, as more nervous investors will be. And so, of course, will be gold supportive. At the same time, we do not consider a big rally on the gold. We think that it mostly will remain in the same trading range, somewhere between 1950 and 2060 area. 2060 is a strong overbought area on the weekly chart. It's also, on the monthly chart. It's also yearly pivot resistance one. And to break it up, gold has to get some strong external driving factors. I don't know, something like technical default on the debt, or maybe big evident problems with the liquidity from the Fed, real recession signs in the United States, jump in inflation or something of that sort, but they need to get some external strong factor. Meantime, as overall background stands relatively positive, gold probably should stand on the surface with some gradual slow action to the upside, some fluctuation in this range, so but without any significant breakout. That's our view until the June. After the June meeting, it mostly will depend on what Fed will do with the interest rates. Our suggestion is highly likely that we will raise rate more, not only in the June but in the July as well. And if this will happen, in the gold market we expect to get some deeper retracement. It will not be the crash of the bullish trend, it just will be the deeper retracement, because the market sentiment will be broken concerning the Fed, and well, that could trigger the pullback that will be extremely suitable for new position taking, especially if you're buying gold physically in the way of the coins or maybe bullions. So this will be really great. But that story for the future, we will return back to it as soon as these events will come. Currently, in the nearest term, where mostly will be dealing with the same daily intraday analysis, just because on the high time frames we do not see something really special. On the daily chart, guys, we have the same patterns in place. None of them have been completed except maybe Grubber. Grubber, yes, it has reached the target because market here has created the new lows to this one. So Grubber mostly is done, but the butterfly hasn't reached the target yet, which is 1955, and this nicely looking engulfing pattern also hasn't reached the target. We are watching for 1955 area as a nearest standing destination point, so we think that this level still has good chance to be reached on next week. Because if you take a look at the hourly chart, recall our concern, bullish concern that we had in the beginning of the Friday, on the Friday morning when we talked about this. We said, take a look, market is still could form the head and shoulders where we're start our talking right at this point. And we also were watching for a grubber on the 4-time frame chart. And we said, if you would like to take the position, just keep watching what will happen. If no grubbers will be formed, you could consider taking the short position. And in general, we said that performance here is not bullish. So because gold has acceleration on the bearish swings, but no significant reaction on the bullish swings. And if market forms head and shoulders, reverse head and shoulders, it should be quite, vice versa. And that was our suggestion, that probably this pattern will fail, but we were needed some confirmation on Friday. And now we've got this confirmation, so you can see that indeed no right arm has been formed. Market was made some attempt to go higher, but collapsed right back to the lows. No grubbers on the 4-time frame chart also have been formed. It means that this we could treat as a failure of the next head and shoulders pattern. So initially we were considering, if you remember, this one. It also might be the head and shoulders, but this has not happened. Right now, as you can see, this larger pattern also has failed. It means that on the 4-hour time frame chart, market is testing for a second time 1980 support will become weaker, and chances that market will reach the 2030 area become smaller. It's probably actually we will not get it. It's just because market definitely has no ability to move back to the 2030 area. It means that the price performance to the downside with the engulfing pattern on the daily mostly is started. And based on the ABCD pattern that we have, let's take a look. It stands around 1944. Here we have nearer standing 618 level 1940, and also this perfectly agrees with the daily 1955 support right there. So actually we have a confluence. That's our nearest destination point. So we think that this, well, mostly is starting swing to the downside. You could use larger pattern, for example. You also could use this one, but well, target will not change significantly. So it mostly stands around the same 1940, 1940, and 1950 area. So that's actually what we have on the gold. Let's keep watching, and it seems that market's attempt to complete this shoulder is over. So based on the picture that we see currently, if nothing extraordinary will happen, of course, it seems that in the beginning of the week we probably should get finally downside continuation of the gold market to the predefined support area.